All right, so we are going to continue with what our basic forex terminologies, right? So we are going to look at fundamental analysis, technical analysis, lot size, pips, and break even. Now, starting with fundamental analysis, we have two types of analysis on the forex market: fundamental and technical. Now, with fundamental, it's a type of analysis on the market whereby what you use real world events and happenings. So in this case, if there's a war going on in a specific country, let's say Ghana, right? Our currency is going to what get weaker because when there is war, a lot of what businesses close and a lot of what economic productive activities are reduced or what start stalling. So that means that country is going to what be retrogressing and our currency is going to be weak. So with that specific idea, having that idea that okay, there's war going on in this country, that means that country's currency is going to perform weaker. When you come to the chart, you'll be looking to trade any currency you trade against the CD. You'll be looking at it that currency is going to gain strength against the CD. So in this case, if you come to a US dollar against a CD chart, you'll be what anticipating the dollar will be strong over the CD. So in this case, you'll be looking to buy USD GSC, right? Yes. So with fundamental analysis, you just had that idea to buy US dollar against the CD because there's real world events happening whereby the CD will be affected by the war, right? So that is fundamental analysis. With fundamental analysis, you analyze the chart with news, right? News. So let's say war. There can also be rate hikes. If a country hike its rates, right, that means that country's currency is going to gain strength. And if a country cuts rates, right, that means that country's currency is going to lose strength. All right, that is for fundamental analysis. Now with technical analysis, you analyze the chart with certain tools, right? Certain tools, and these tools can be found on the chart, and then certain strategies, right? With technical analysis, you start drawing lines on the chart to check trends, the support and resistance, supply and demand, other concepts used to analyze the chart. So with technical analysis, you analyze the charts using some tools to aid you to analyze. So you don't use real world events. You just look at the chart and try to make your analysis based on what you are seeing on the chart. So you'll be drawing with certain tools, like let's say we have the trend line, right? We have all these tools, right? So you'll be doing analysis with these tools. That is the technical analysis. So you are being very purely technical, right? You are not going to add fundamental analysis, right? But there are people who add both fundamental and technical analysis, which is the best, right? So you add both fundamental and technical analysis, right? So once you know that okay, the US dollar, it will be stronger against the Ghanaian cedi. Once you come on the chart, you have to analyze technically to make sure your technical analysis aligns with what you are hearing in the news, right? Now moving on, we have lot size, right? We have lot size. Now with lot size, before we touch on the lot size, I'll first introduce the pips. Then we are going to link the lot size to the pips. Now with pips, right? Pips helps you know how far the market has moved in a specific range. This is how you will be able to through the pips and lot size. That is how you are going to know how much you make on the forex market. So you should be paying attention at this point, right? So the pips helps you know how far the market has moved in a range. So in this case, let's say this is one range and this is another range, right? And then price is pushing up. So you entered a trade on the chart. Let me use this. Okay, so you entered a trade on the chart, right? You entered a buy trade on the chart, anticipating that the specific currency is going to push to this level, right? So you buy. In the previous video, I said in the forex market, if you buy, you're anticipating that currency is going to push up, and if you sell, you're anticipating it's going to push down, right? So once you buy, the market will what? If it's pushing up, it will be moving this way, right? Or let's use this already drawn price. So let's say when the market was at this range, I was anticipating it will push down to this level, right? Now, the distance that the market has moved from here, that the number of steps that the market has moved from this top to this down of this range is what we call what? Pips, right? So pips it starts calculating in numbers. So we have 1 pip, 2 pips, 3 pips, 4 pips, 5 pips, 6 pips, 7 pips, 10 pips, 50 pips. We have 100 pips, we have 300 pips, right? Depending on the range that the market has moved. So let's say the market can move from this range to this range, and then that will be what? 30 pips. So let's take it like 30 pips, right? And then the market will move from this range to this range, and that will also be what? 30 pips. And the market will move from what? This range to this range, and that will also be what? 30 pips, right? But in all, the market moving from this range to this range will be what? 90 pips, right? So the pips helps you know how far price has moved what in the range. Now, someone will ask, why do I have to know if the market has moved this number of steps or this number of pips, right? Now, you'll be using that pips to what? To know how much you are going to earn by adding what? The lot size. So that is when the lot size comes in. So the lot size is what is going to give that what? That pips a value. It's going to give that pips a value in money. It's going to help you know how much that pips is worth in what? In money, right? So the lot size is what is going to do that job, right? It's going to help you know how much that pip is worth in what? Money. So what type of lot sizes do you have, right? We have 0.1, right? 0.1. We have 0.1. We have 0.2. 0.2. We have 0.3. We have 0.3, 0.4, 0.5, 0.6, 7, 0.9, and then from 0.9 we move to one lot, right? We don't move to 0.10, we move to what? One lot. Then from one lot we move to 2 lots, 3 lots, 4 lots, 5 lots, 6 lots, 7 lots, 8 lots, 9 lots, and then we move to what? 10 lots, right? So we have a lot of lots, right? So we even have 0.001, and we have 0.002, 0.003, 0.004, up to 0.009. So from 0.009 then you move into what? 0.1. But I want us to use 0.1 as an example. Now with 0.1, depending on the currency that you are trading in your you created your account in, that is what it's going to show. But let's take US because most people use the United States or trading the United States dollar. So with 0.1, what that means is that when the market moves every step, you want it to valued as what? $1. If the market moves every step on the chart, you want it to be what? Valued as what? $1. You want every step on the market, which is the pips, to be valued as $1. So with 0.1, every pip is worth $1, right? Every pip is worth what? $1. $1. And with 0.2, every pip is worth what? $2. With 0.2, every pip is worth what? $2. So as for 0.3, every pip is worth what? $3, and so on and so on. Now when we get to one lot, you can guess it, every pip will be worth what? $10, right? Because 0.9, every pip will be worth what? Every one pip will be worth what? $9. So with one lot, every one pip will be worth what? Every pip or every one pip will be worth what? $10. $10, right? $10. Now what that means is that once you know how many pips the market has moved, Depending on the lot size you have used, that is what is going to translate into what how much you will make. So in this case, if the market moves from this range to this range, which is 30 pips, right? So you predicted that the market is going to push down, and it pushed down from this range to this range, right? And then the range that calculated in pips was 30 pips, right? And this range to this range was 30 pips. Now, before you enter every trade, you are going to choose a lot size. So, as I said, we place the trades on the MT5 app. So, on the MT5 app, before you enter a trade, before you click on buy or sell, you are going to select a lot size. So, in this case, let's say I'm entering a trade and I'm selecting 0.1. That's my lot size. So, once I click sell on this trade, I'm expecting the market will push down. And the market actually pushed down from here. So, let's say I sold from this high, right? Or I sold from this high. And then I was expecting the market to push down to this level. Now, from this level to this level, because we know that pips helps us to know how far the market has moved. From this level to this level, we are going to know that the market has moved 30 pips. So let's say the market move. We have a tool to calculate how much the market has actually moved. It's called the long and short tool on the trading view. There will be a video to show you or explain to you how to use the trading view, right? We're going to explain to you how to use the trading view. So let's say if from this range to this range, if you use this short tool, right, and then so on the forex market, when you are selling, it's called I'm going short, right, and when you are buying, it's called I'm going long. So depending on which direction, you are going to choose either short or long. So let's say you are expecting to go down, so you choose what? Short. Now the red portion indicates what? Your stop loss area, and then the green portion indicates what? Your take profit area. Now let's say if I was going to the upside, I was going long, this is how it's going to look like. My red portion will be below, and then my green portion will be above, because in a bullish market, when you're expecting the market to buy, when it's pushing up, you are going to gain profit. When it's pushing against your direction, which is down, you're going to lose money. In the same way, when you predict the market is going to push down, when it's pushing down, you gain profit. When it's pushing against your direction, which is up, you are going to lose money. So the red is to indicate what? Against your analysis, stop loss, right? And the green is to indicate what? In your analysis, in line with your analysis, which is what? Green. Take profit. It's very, very understandable, very easy. Now, so let's say when the market push from this range to this range is 30 pips, then depending on the lot size I use, then I'm going to know how much I'm going to earn. So in this case, if I used a 0.1 lot size, right, 0.1 lot size, if the market moves 30 pips, I'm going to make what? 30 what? Dollars. Right, I'm going to make what? 30 what? Dollars. Does it make sense? It's very, very simple. If the market moves 30 pips, I'm going to make $30, because every pip, I'm telling the market that every pip should be valued at what? $1. So since I selected 0.1, the market has gone 30 pips. I'm going to gain what? $30. Now, if the market continues to go down an additional 30 pips to 60 pips, then I'm going to, my account, my balance in that trade is going to increase to what? $60 dollars. If the market keeps going down in my direction, right, to this range, the account will also increase again. And then that will be 90 pips, and I'm going to make what? $90. So that is how traders actually, after predicting, know how much they are going to make. So you can enter a trade and know how much you are going to make if it goes in your direction, right? Very simple. So let's say same scenario, I enter a trade and I use what? 0.2, which is $2, right? That means I'm trying to tell the market that it should value every step as what? $2, right? So in this case, this 30 pips, if someone who entered this trade and used 0.1 is gaining $30 from the 30 pips move, right? Another person is also going, who entered the same trade with me, right, and used 0.2 is going to gain what? $60 dollars, right? So whilst you are getting $60 when it moves 60 pips, that person will getting what? Times 2 of that, right, which is what? $120. So that is how pips correlate with what? The loss side. How we use the pips and the loss side together to know how much what you will be making. So first, once you do your analysis and then you know what, okay, this is where I'm expecting the market to reach, then you quickly use your short tool to know whether what. Now in the next lesson, we'll be looking at where to read your stop losses, where to read the pips and all that. But for now, just understand that what. Just understand that what, with pips, when you know the range and you know the number of prices moving, you just use your lot size to give that pips a value in what in dollars, right? So in this case, now let's use one lot, which is the last example, right? With one lot, if people who enter this trade with 0.1 are earning what $30, it moved 30 pips. Someone who used one lot is going to earn what $300 in that same trade, because he entered the trade telling the market that I want every pip to be valued as what $10, right? I want every pip to be valued at $10. So when the market moves 10 pips, the person who used 0.1 earning $10, he will be making what times 10 of that, so which will be what $100. So if the market moves 30 pips, he will be making what $30. If you don't understand this, take your time and what after watching this video, re-watch it again, and then you understand. It's very easy. So before you enter every trade, you have to know what your take profit and your stop loss. Now, to know your take profit and your stop loss, let's say for my analysis, I think the market is going to go down here, right? Then I'll go and take the what. You don't need to go to any site to go and do a calculation. You just take your short tool, right? You put it where you are intending to enter the market, which is your entry price, right? You put your stop loss. So as I said in the previous video, I said the stop loss. You are trying to tell the market that, okay, I was thinking the market will push down, but now what? It's not pushing down in my direction. The market has started, like, let's say you're trying to tell the market, okay, if I'm saying the market is pushing down, but it doesn't end up pushing down and it pushes up, this is where I should what close out of the trade automatically in losses. Now, the same way the market goes in your direction, you are going to earn money. This is how you also lose money. If the market goes against you, the number of pips that it has gone against you is going to be translated in money. So in this case, if your stop loss is 30 pips, right? Let's say from this range to this range is 30 pips, right? From this range to this range is 30 pips. And you anticipated that the market is going to push down. So that's your stop loss. And your take profit is what? 90 pips. And this range to this range is 90 pips. This range to this range is 30 pips. And you were expecting the market to push down, but then it didn't push down enough, and then it pushed to the upside, entering into what against your trade. Now this is your entry price. When the market starts pushing up this way and it goes to hit this level, which is your stop loss, you are going to lose what $30. So whilst when it goes in your direction, the number of pips is going to translate into money. The same way when it goes against your direction, that number of pips it will go against your direction. You are going to lose the amount of money from your account balance, right? So that is how traders make and lose money on the forex chart, by knowing how to calculate their pips, and they will know how much they are earning per trade, how much they are going to lose if the trade goes against them. So that's why we have risk management. We'll be talking about all that like in the later sessions, but now just understand that the pips helps us to calculate how far the market has moved in a range, and then the lot size help us know how much that pip is worth. So it's just simple. There's a lot of lot sizes. We have 0.4, we have 20 lots, 50 lots, but I am just using these few ones for example, right? And then try to watch over again. If you don't understand, watch it over again, and maybe you can get additional information from the internet, how lot size and take profit, how lot size and pips work. But I think this video is very easy to understand, right? So once you analyze the chart, you're okay, right? I think this chart is going to push to the upside. Fine. So it's going to push to the upside. Which range do you think is going to push to the upside? I think this trade at this point is going to push to the upside to this top, right? So then we calculate with this long too, because we expect the market to go up. We are going to long. Now we use this long too, and then we click on buy on the MT5 app. Once you click on buy on the MT5 app, you are going to set our stop loss and take profit. Or you can also set your stop loss and take profit before you even enter the trade. But let's say you have entered the trade. So currently this is where the market is at. So I'm going to enter. This will be my entry price, right? And I have to set my stop loss. Then my stop loss is the red area. So I'll set my stop loss as, let's say, 30 pips, right? I'll set my stop loss as 30 pips. And then I'll set my take profit as let's take it like 30, let's take like 90 pips, right? Let's use the same 90 pips. So what that means is that if the market becomes successfully moves from this entry point to this point, then I'm going to depending on the lot size. So in this case, if I use what a 0.1 lot size, I'm going to get what $90. In the same way, if the market is to move against my prediction down to hit this level, I'm going to lose for $30. So that is how money is made and lost in the forex market. So you realize that fundamentally it all lies within trying to predict the correct direction of the market. That is how you are going to make money, right? You're going to make money. So if a trader says, oh, I caught a 50 pips move, right? Then you ask the person, how much lot size, which lot size did you use in that trade, right? Say, okay, well, I used a 0.1 lot. Then you know that what that trader made what $50 from the 50 pips move. And then another trader will say, oh, I took that same trade, but I made what? I used a 0.2 loss, and then you know that that trader gained what $100 from that same trade, even though they all enjoyed the 50 pips move, right? And then another trader will be like, oh, I also what used a 0.3 lot size, so you know that that trader what also enjoyed what $150 profit from that same 50 pips move. So the pips helps you know how far price has moved, and then the lot size will help you give that movement what a value in dollars, right? It's very, very simple. So if you don't understand, you can watch the video over and over again, right? And then you have opportunities to ask questions in the community. You can DM me directly, and then you ask questions. So right, understand this, and then you'll be able to know how getting money in the market is calculated. Now the last thing I'll be talking about is break even. Now with break even, what that means is that when you project that the market is going to push to the upside, right, and it actually what pushes to the upside, now actually pushes to the upside, at that time you had already what set what your stop loss and what your take profit. Now what break even means is that you are going to change your stop loss price, right? You're going to change where you place your stop loss, and then you put it at what entry. So let's say when you enter the market, your stop loss was 915.05, right? Now once the market goes in your direction a bit, and you want to run a risk-free trade, you will change these stop loss figures. So let's say this was the stop loss from this range to this range. This is the figure. This particular range the market is at line is 929.43, right? Now once the market pushes in your direction maybe to this level, and you think, okay, then for now I want to run a risk-free trade, right? Then you change this 929.43 on the MT5 app, and then when you key in your entry price, which is what 1259.03, so your stop loss will move, that line will move to up to your entry, which means that if the market, you are trying to tell the market, right, that if the market is to push down, if price is to push down, right, against your direction, after it has even went up and then it comes to this level, it should close you in what in neither profit or what loss. So you are breaking even, right? You break even in business. When you break even, that means that what you've never made a loss, and what you've neither also made what profit. So that is what the break even means. So with a break even, you put your stop loss at where you enter the market, your entry price, right? Yes, you put your stop loss at where you entered the market. So that is the break even, right? I'm very sure, right, these terminologies are very easy to understand. You need to understand all these terminologies to be able to start trading the market. So now you understand that fundamental analysis involves what making analysis, putting into consideration real world events, right? And with technical analysis, it involves using what technical tools to analyze the market, like lines, trend lines, support and resistance, right? Supply and demand, indicators, and all that, right? And then lot size, it's what gives pips what a value, helps you know how much you are earning what in dollars, and pips helps you know how far the market has what moved. And then finally, break even helps you to what run a risk-free trade. So that involves changing your initial stop loss what number to what where you actually enter the market. So if the market is to reverse against your prediction, you are going to be close in neither a win or a loss. So people who have businesses know that with break even, what you neither what make profit or you neither make a loss. So let's say, oh, you tell someone I am broke even this month. That means that month you neither what made profit and you neither what made a loss, right? So don't forget to subscribe the videos. Don't forget to also like, and also give comments on how your responses to this video, how you are responding to this video, and then stick to the course. We'll be releasing more videos. In the next video, we'll move into another topic. We are taking it topic by topic. I don't want to rush this. I want you to understand trading and understand what once and for all. All right.